Welcome back to Griffonomics, where we conduct financial investigations to define the risk before we look at the reward. Today, we are opening the file on a company that has, well, fundamentally changed its identity. We are diving into the Neoprime emergence of Ondas Holdings, ticker ONDS.
It's good to be back, and you're right, changed identity might actually be an understatement. We are looking at a complete metamorphosis here.
It really feels that way. We are looking at a stack of documents here, transcripts from their January 2026 Investor Day, the preliminary financials for 2025, and their strategic roadmaps. And the picture that emerges is of a company that has pivoted so sharply, if you looked away for 6 months, you might not recognize it. They've gone from a technology developer to what they're calling a Neoprime defense contractor.
And that word Neoprime, that's really the key to this entire deep dive. It's not just some marketing fluff they came up with. It's a specific business model that, solves a very specific problem in the defense industry.
Okay, so let's start there. Because for the listener who knows what a prime is, the Lockheeds, the Raytheons, the giants of the industry, what exactly is a Neoprime?
Think of it as a hybrid organism. On one side of the DNA, you have the agility of a Silicon Valley startup. You have rapid innovation, software-defined hardware, and, most importantly, speed. Startups are great at building cool things fast.
But they're fragile.
Incredibly fragile. They run out of cash, they can't scale production, they get crushed by compliance paperwork.
Right, the classic valley of death in defense tech.
Yeah.
You have this great prototype, and then bankruptcy 6 months later because the government took too long to write a check.
Exactly. So the Neoprime model grafts that startup agility onto let's say, the skeletal structure of a traditional prime. And that means financial durability, massive scale, and integrated systems. Ondas is trying to position itself to be fast enough to innovate, but big enough to survive the bureaucracy of the Pentagon.
And that brings us right to the core conflict of today's investigation. The market is struggling to value this beast. Is it a tech stock? Is it a defense industrial stock? We have a current valuation on one side, and then we have this expansion flywheel they are projecting for 2027.
Yeah, and the mission today is really to see if the reality matches the pitch. We need to figure out how a company with a battle-tested tech stack and a cash pile that is, frankly, unusual for its size, is positioning itself for modern warfare.
Let's get straight into that cash pile, because that is the elephant in the room. Section 2 of our investigation is financial velocity. We are calling this the fortress balance sheet.
The numbers here are just stark. As of late 2025, looking at the pro forma figures, Ondas has a cash balance exceeding $1.5 billion.
Just to make sure everyone caught that, $1.5 billion. And that is adjusted for a massive offering, about $1 billion, that closed mid-January 2026.
It is a staggering amount of liquidity for a company of this market cap. But in the defense sector, you have to kind of retrain your brain on how you view cash. In a software company, that much cash might look inefficient. Shareholders might ask,
why isn't that being put to work or returned to us?
Exactly. But in defense, cash is a strategic weapon.
Okay, break that down for us. Why does the Department of Defense care about their vendor's bank account? They care about whether the drone flies, right?
Right. They care about the drone flying today, but they care a lot more about whether the company will exist tomorrow. This is all about counterparty risk.
Counterparty risk.
Right. Imagine you are the DoD or a foreign ally. You are looking to procure a fleet of thousands of autonomous systems. These aren't one-off purchases like buying a laptop. These are 10-year commitments for service, for parts, for software updates, and for training.
You can't buy a critical border security system from a company that might miss payroll in Q3. You just can't.
Precisely. By sitting on a $1.5 billion war chest, Ondas is signaling to these massive government customers that they are durable. They are reliable. They are sending the message that they have the staying power of a Lockheed Martin or a Northrop Grumman, and that removes the existential risk from the buyer's calculus, which, makes closing those 9-figure deals significantly easier.
So the cash functions as a trust signal. It's basically them saying, we aren't going anywhere. But they aren't just sitting on money. The revenue engine is actually revving up. I'm looking at the preliminary FY 2025 report here.
The velocity is impressive. They are projecting revenue between $47.6 million and $49.6 million for 2025.
And context is everything here. That represents a year-over-year increase of roughly 576%.
576%. That is nearly a 6x jump. That's not just growth, that is hyper-growth territory.
It is. And if you drill down into the fourth quarter of 2025 alone, they're coming in at $27 to $29 million.
Yeah.
And that beat their own internal targets by 51%.
That's a massive beat. Usually in this sector, you see companies missing targets because of supply chain delays or contract slippage. A 51% beat suggests the demand is pulling the product faster than they ever anticipated. It implies that the pull from the market is stronger than the push from their sales team.
It suggests real momentum, and that momentum is clearly carrying over into their 2026 outlook. They've raised their guidance significantly. They're now targeting revenue of $170 million to $180 million for 2026. That's up 25% from what they told us previously.
And there is a pretty important asterisk on that number, right? Management is explicitly calling that guidance conservative.
Conservative is a word that gets thrown around a lot, but in this case, the math seems to back it up.
It does. That $170 to $180 million figure excludes potential revenue from future M&A. And we know, because they've told us, that they have a massive M&A pipeline and $1 billion in cash ready to fund it. So that guidance is essentially the floor. It's what they believe they can do with what they have in hand right now, completely organically.
That is a fascinating setup. You have a floor of nearly $200 million in revenue with $1 billion of dry powder waiting to acquire more revenue streams. It feels like they are setting themselves up for a sequence of beat and raise quarters.
It creates an asymmetric upside for sure. The baseline is solid, but the potential for an explosive modification of that baseline through acquisition is very, very high.
All right, let's pivot from the financials to the actual hardware. Because you can have all the cash in the world, but if the robot falls over or the software glitches, none of it matters. Section 3. Acquisitions and building a system of systems.
This phrase, system of systems, is crucial. It's the core of the Neoprime value proposition. Historically, defense procurement was very fragmented. You bought a drone from company A, you bought a ground robot from company B, you bought a controller from company C.
And none of them talk to each other.
None of them talk to each other. The soldier in the field ended up with 3 different tablets, 3 different batteries, and a massive headache. It was integration by duct tape. Ondas, through its OAS unit, Ondas Autonomous Systems, is moving beyond those point solutions. They're offering a unified command and control layer, or C2, that integrates everything, air, ground, defense, all under one umbrella.
Let's walk through the hardware stack they've assembled to feed this system. They've been on a buy and build shopping spree. Let's start on the ground with RoboTeam.
RoboTeam is the foundation. These are tactical ground robots, or UGVs, unmanned ground vehicles. The most important thing for you to know about RoboTeam is that this isn't vaporware. These systems are combat proven. They are actively deployed by the DoD, by NATO, the U.S. Marines, and very importantly, the IDF in Israel.
I was looking at the Robox platform in the investor deck. It looks like a sci-fi delivery truck for war. It's a ground robot that launches drones. Is that right?
That's the system of systems in physical form. It's a containerized unit. The ground vehicle handles the heavy lifting, the battery power, the long-range comms, navigating the rugged terrain. Then, when it needs eyes in the sky, it literally launches a drone from its back. The drone does the ISR, intelligence, surveillance, and reconnaissance, or even an attack run. And then
It lands back on the robot.
it lands back on the robot, recharges, and they keep moving.
It solves the biggest problem with small drones, which is battery life and range. The ground robot is essentially a miniature mobile aircraft carrier.
Exactly. It extends the operational envelope significantly. Now, move up to the aerial layer. You have American Robotics and Aerobotics. This gives them the Optimus system.
The drone in a box, I've heard about these.
Right. And the differentiator here isn't just that it flies, it's that it is FAA certified for automated operations. It lives in a box, it wakes itself up, it patrols a perimeter, collects data, and it lands itself. There is no pilot with a joystick.
And that's essential for protecting infrastructure or bases where you can't afford to have a human pilot on shift 24/7.
Oh, absolutely. It completely changes the economics of surveillance.
And then, because the enemy has drones too, they have the counter-UAS portfolio, the Shield. This part fascinated me because they seem to cover the entire spectrum of how you stop a hostile drone.
They do. They have the hard kill and the soft kill. And understanding the difference is key to understanding modern security threats.
Let's distinguish those. Hard kill is kinetic, I assume.
Very kinetic. This is their Iron Drone unit. It physically intercepts the hostile drone. Think of a net, a direct collision, something that takes it out of the sky. This is what you use on a battlefield where, falling debris isn't a huge concern. You just want the threat neutralized immediately.
But you can't really do that over a football stadium or a city center. You can't have a drone crashing into a crowd or a building.
Which is precisely why you need the soft kill. That's their Centrix unit. This is cyber over RF. Instead of shooting the drone, you hack its communication protocol. You essentially convince the drone that you are the pilot. You take control, you fly it to a safe zone, and you land it gently.
That capability is becoming mandatory for Homeland Security. You see it everywhere.
It is, and by owning both the Iron Drone for the front lines and Centrix for the home front, Ondas covers the entire market. They also have some niche capabilities tucked in there, like Apero Motion doing robotic dogs and 4M Defense doing humanitarian demining.
So it allows them to walk into a meeting with the government and say, we can secure your border, demine your old battlefields, patrol your bases with robot dogs, and intercept incoming drones.
Yeah.
It's a one-stop shop.
And that breadth is what allows them to bid on massive integrated projects like the one in Section 4, Project Hives.
Let's talk about Project Hives. This feels like a turning point for them. It's not a pilot program. This is a national-level initiative.
It's a milestone event.
Yeah.
And the headline here, the really big news, is that Ondas isn't a subcontractor. They are the prime contractor.
That's a huge badge of honor in this industry.
Yeah.
Usually the little guys are feeding parts to the big guys. Here, Ondas is the one calling the shots.
It validates their ability to lead national security initiatives. And the scope here is just immense. We are talking about deploying thousands of autonomous drones for border protection. This isn't about watching a single gate. It's about persistent coverage of an entire frontier.
The mission profile in their documents mentioned assaulting swarm-based operations. That phrase stuck with me. It sounds incredibly futuristic.
It should. That is the future of warfare being written in real time. Swarm-based operations means multiple autonomous assets acting in coordination. Imagine you have a perimeter. You have sensors. When a breach is detected, the system doesn't just send an alert to a human. It dispatches a swarm of drones to investigate, to track, and potentially to intercept. The drones talk to each other to coordinate the intercept without a human in the loop.
It's truly persistent surveillance. 247, no coffee breaks, no getting tired.
And financially, it's a windfall. We are looking at potential orders exceeding $100 million over a 1 to 2 year timeline. But here is the nugget for the investor listening right now. These orders are not yet fully reflected in the current backlog figures.
So there is imminent backlog expansion expected from this project alone. That's the hidden value we talked about in the intro. The market sees the current backlog, but Project Hives is a wave that is just about to break.
Exactly. The contract is won, the validation is there, but the ink on the specific delivery orders is still drying. When those orders hit the books, the backlog number jumps significantly.
Okay. Now, if Project Hives is the border security play, Section 5 is the full-scale war play, the strategic submission to the Drone Dominance Program, or DDP.
This is the billion-dollar opportunity. The Department of War, the Dow, launched this program because they have a math problem.
They have a mass problem.
They have a mass problem, yes. They've looked at recent conflicts, specifically the high-intensity conflicts in Eastern Europe, and realized that expensive, exquisite platforms like a $20 million Reaper drone are just not sustainable against cheap, mass-produced threats.
You can't shoot down a $500 drone with a $2 million missile forever. You go bankrupt.
Correct. And you also can't afford to lose a $20 million drone every single time you want to strike a small target. So the DDP is designed to solve this. The goal is to rapidly field 340,000 low-cost, small, one-way attack UAS over just 2 years.
340,000 units. The sheer volume is hard to wrap your head around. It sounds more like automotive production than aerospace.
It represents a structural shift in warfare. We are moving from low-rate, bespoke manufacturing to the mass commoditization of air power. These are attritable assets. You expect to lose them. They're basically ammunition, not aircraft.
So Ondas threw their hat in the ring for this.
They did. In January 2026, they submitted the WASP platform.
Tell us about the WASP. What makes it special?
It's purpose-built for this exact requirement. It is ruggedized. It is designed for one-way attack missions. It's essentially a loitering munition. But most importantly, it's affordable and it's simple. The Dow has made it crystal clear. They do not want gold-plated technology. They want simple, secure supply chains. They want speed, and they want it made in America.
And the timeline on this is moving incredibly fast. Usually, defense procurement moves at a glacial pace.
Not this time. Initial orders could drop as early as February 2026. This isn't a 5-year procurement cycle where you have meetings about meetings. This is an immediate operational need. The Dow needs these units in the field yesterday.
But this raises a massive logistical question, which leads us directly into Section 6, the industrial base. If the Dow orders, say, 50,000 drones next month, how on earth does Ondas build them? They are a Neoprime, not Boeing. They don't have 50 years of factory infrastructure. They don't have square miles of assembly lines.
That is the surge capacity problem. And the answer lies in the Neoprime manufacturing model. You don't build the factories yourself. You
Yeah,
partner.
you outsource the heavy lifting to people who already have the conveyor belts and the skilled labor.
Exactly. You find partners who are experts at bending metal and assembling electronics at a massive scale. Ondas has secured a very strategic partnership with a company called Kitron.
Kitron. And they are based in Johnstown, Pennsylvania.
That location is not accidental. Johnstown is deep in the heart of the American industrial manufacturing belt. And Made in USA is a strict requirement for NDAA compliance on these programs. Kitron is a leader in defense-grade production. They know how to handle sensitive IP, they know the quality standards.
So Ondas provides the blueprint, the software, the secret sauce. Kitron provides the assembly line.
Right. And they aren't alone. Ondas also has partnerships with Detroit Manufacturing Systems, DMS, and Flextronics. This creates an instant surge capacity. For the WASP drone specifically, they have stated they have the capability to scale production to 20,000 units per month.
20,000 a month. That is absolutely automotive scale. That is startling.
It is. And that is how they can compete with the major primes without the massive capital burden of owning the plants themselves. It keeps their balance sheet flexible. They can use that $1.5 billion for acquisitions and R&D rather than sinking it into concrete and machinery.
It's a very smart play. It keeps them agile. It means their fixed costs are lower, so they can weather downturns better, but they can scale up almost instantly when a big order hits.
Exactly. It converts fixed costs into variable costs. It's a very capital-efficient model.
But let's look at the horizon, Section 7, the path to profitability and the 2030 vision. Because right now they are spending money to grow. They are investing heavily in this system of systems.
Yeah.
When do they turn the corner and become profitable?
They have laid out a very clear, staggered roadmap for EBITDA positivity. They aren't promising profit tomorrow, which is good. They're showing exactly when the red ink is expected to turn black.
Okay, walk us through those milestones.
Step 1 is Q3 2026. So by the third quarter of this year, the individual product companies, RoboTeam, American Robotics, and so on turn EBITDA positive. They start covering their own costs and contributing positively.
Okay, so the subsidiaries stop bleeding. That's the first tourniquet applied.
Correct. Step 2 is Q3 2027. The entire OAS unit, Ondas Autonomous Systems as a whole, turns positive. That accounts for the integration costs, the shared services, all the overhead within that division.
And then the corporate level. The whole shebang.
Q1 2028. The entire entity, Ondas Inc., turns EBITDA positive. So we're looking at a roughly 2-year ramp to full corporate profitability from today.
And driving this, what they call the expansion flywheel. I love a good flywheel concept. How does this one work?
It's all about operating leverage. Right now, they are investing heavily in shared infrastructure, supply chain management, a unified sales force, those manufacturing partnerships we just talked about. Once those are fully integrated and paid for, your revenue starts growing significantly faster than your costs. Every new dollar of revenue becomes more profitable than the last because you've already paid for the infrastructure to support it.
It's the classic software as a service model, but applied to defense hardware.
In many ways, yes. The upfront investment is heavy, but the scaling becomes very profitable.
And where does this flywheel take us by 2030? What is the destination?
The destination is very ambitious. Management is targeting $1.5 billion in annual revenue.
$1.5 billion.
With 30% EBITDA margins.
Those are software-like margins on hardware products. That is very rare in the defense sector. Usually hardware margins are much, much thinner.
It is rare, but they believe the market can support it because they are offering that high-value software layer, the AI, the autonomy, the C2 integration on top of the hardware. They aren't just selling metal, they are selling an integrated capability, and they are chasing a total addressable market, a TAM of about $117 billion. So $1.5 billion is a big number for them, but it's still a tiny slice of the overall pie.
And we also can't forget the M&A strategy here. They have a specific arm called Ondas Capital. They aren't just sitting on that cash, they are actively deploying it.
Right. They plan to deploy $150 million into what they call TRL7 Plus technologies.
TRL7 Plus and out. Let's unpack that acronym for the listener.
Technology Readiness Level 7 or higher. In plain English, that means mature technology. It means the prototype has been demonstrated in an operational environment. They are not buying science projects or sketches on a napkin. They are buying stuff that works.
They want things that are ready for the battlefield today, Not in 5 years.
Exactly. And they've been specific. They cited the intent to invest in the drone fight group, focusing on ISR and strike UAVs. And the geographic angle here is fascinating. They're looking at technology from Ukraine and Israel.
Places where drone warfare is being invented in real time out of pure necessity.
Exactly. The innovations in those theaters are moving faster than anywhere else on Earth because the feedback loop is immediate. If it doesn't work, it gets destroyed. Ondas' strategy is to identify that battle-tested IP, acquire it, bring it to the U.S., manufacture it at scale with partners like Kitron, and then sell it to the DoD and its allies. It's a form of technological arbitrage.
It's a very efficient way to innovate. You let the battlefield do the R&D and the testing for you. You de-risk the technology before you even write a check to buy it.
Yeah. Precisely. It's a huge advantage.
Okay, we've covered a ton of ground. We've unpacked the balance sheet, the robot dogs, the swarms at the border, and the massive manufacturing surge. Let's wrap this up with our final verdict. Section 8. The flywheel conclusion. What is the synthesis here?
When you put it all together, Ondas has effectively engineered a moat for itself. Usually, a startup has great tech but no money. They die in that valley of death. A prime has great money but often slow tech. They struggle to innovate quickly. Ondas has combined a fortress balance sheet, that $1.5 billion, with battle-tested tech from the front lines of modern conflict. It's a rare combination.
And the market seems to be validating it, not just the stock price, but the actual orders.
The backlog tells the story. It surged 180% to $65.3 million in just 6 weeks at the end of last year. That isn't speculation. That is the market voting with its checkbook. That is customers signing on the dotted line.
So for the listener trying to make sense of this pivot, Ondas has stopped being just a developer. They have put on the Neoprime suit. It's risky, sure. Any rapid scaling is risky. Execution risk is real. You have to manage the partners, integrate the acquisitions, and deliver on these massive contracts. But that cash buffer changes the equation entirely.
It buys them time, and it buys them trust. And in this industry, trust is the currency that matters most.
So what is the mantra for this deep dive?
Risk defined, portfolio protected.
There it is. Risk defined, portfolio protected.
And if you are watching this space, keep your eyes peeled for those February 2026 DDP announcements. If Ondas lands even a slice of that 340,000 drone order, that flywheel might start spinning a lot faster than anyone expects.
That will be the catalyst to watch, absolutely.
Thanks for diving in with us. We'll catch you on the next Griffonomics.